Yes, and why she believes overregulation of banks in Europe is driving growth away. It's been a great year. Our numbers will be totally on track to deliver all the numbers in 25. We're going to reach our profitability, 16.5%, and for shareholders, great value creation, increasing dividend per share. Our share price is up 100%, but there's still a lot of inherent value in our stock. Our multiples are still very attractive compared to U.S. banks, for example. We're trading at a bit under 10 times price earnings, and we deserve a premium to Europe, and I would say even to the U.S. banks, because our profitability is getting better, and we have growth. What were the main drivers of the success you've had this year? I say it's an overnight success, 10 years in the making. So since I took over, I inherited a group of banks. It was a big bank, but many different geographies, different business models, very disconnected. And the whole vision is to bring them all together under a single open financial services platform. And that's what we have been working on. So this year, every single one of our 5 businesses is growing. We have simplified the organization. We sold Poland. We bought in the UK, so our UK business now is at scale. And this is really the opportunity at Santander. We have profitable growth for many years, organically.
Hear the full conversation on the latest edition of the Bloomberg Wall Street Week podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
This is Bloomberg Live with June Russell from Bloomberg Radio.
The Justice Department has been discussing settlements with 2 former officials from Donald Trump's first term who, like the president, claim they're owed multi-million-dollar payouts from the U.S. government as victims of politically motivated actions. Trump's first national security advisor, Michael Flynn, and former senior White House lawyer, Stefan Passantino, have been in talks with the Trump administration since at least late summer. The negotiations marked a shift from the Justice Department's position during the Biden administration, where government lawyers successfully fought both cases. Joining Bloomberg News reporter Zoe Tillman, who's been looking into these negotiations. So, Zoe, why are Flynn and Passantino suing the government?
So they have 2 very different lawsuits stemming from 2 sort of very different, big investigations surrounding Trump and Trump. Michael Flynn is the older case. He was Trump's first national security advisor for a very brief moment in time, and then faced prosecution by the special counsel Robert Mueller in connection with the Russia probe, where he was charged with lying to investigators pretty early on in that investigation, sort of pre-Mueller's appointment, about his contacts during the 2016-2017 transition period with a Russian official. And at first, Michael Flynn pleaded guilty, entered a plea deal, admitted lying, but then changed course dramatically. Hard 180, he brought on new lawyers, Sidney Powell, who would go on to become sort of a very bold-faced name, but was not really in the spotlight at the time, and, backtracked on that and fought the prosecution tooth and nail, and wound up having his case dismissed by then AG Bill Barr. He was subsequently full out pardoned by Trump near the end of his first term. So Michael Flynn sued and said this was a malicious prosecution, this was an unlawful targeting of me, and he was seeking $50 million for the harm that he suffered for that. So Trump loses the election. January 6th happens. There's been a congressional investigation into January 6th, and Stefan Passantino is a lawyer for a number of witnesses who are called as part of that investigation. At least some of them are being paid by a Trump-affiliated PAC, and his clients include Cassidy Hutchinson, who was a former White House aide to Mark Meadows, and he represented her, and then he didn't represent her. She gets new lawyers and goes on to testify in front of a nationwide televised audience, that among other things she heard Trump lunged at someone in a car on January 6th. It was sort of this very dramatic, explosive moment. And Passantino subsequently...
Oh, yeah. What do we got here? We got some more images.
Sort of urging Cassidy Hutchinson to mislead, if not be untruthful to the committee, a claim that he has flat out denied. So he filed suit later saying that the committee and staff leaked information about his work with Cassidy to promote this false narrative about him, that he committed misconduct, an ethical breach. So we have sort of two lawsuits that, on paper are very unconnected, but of a same feather.
The Biden administration fought these cases and won.
That's right. Part of why this is something we were looking at was they both started by filing administrative claims with the agencies before going to court. And it's a process that's sort of gotten fresh attention right now because it's the same process that Donald Trump is pursuing at the administrative level, trying to get, according to the New York Times, $230 million. Also because he says he was wronged by government actors. So, Flynn and Passantino start with that process. They say they don't hear back within the 6-month or so period, so they sue. And the Justice Department under President Biden fights both of these cases and says these are, not merit cases, they're legally deficient, they're procedurally deficient, and in both instances, the Justice Department wins. They get an order dismissing Flynn's case, they get an order dismissing Passantino's case. In Flynn's case, the judge dismisses it, but says, I give you leave to file an amendment complaint. You can come back and try again. So this happens at the very end of 2024. Obviously, there's an election. Trump comes back to office. So Flynn's case is not dead in the water. And his lawyers asked for extensions, saying, Trump is releasing new information about the Mueller probe. We want to have more time to update our complaint. And the judge says, it's fine. DOJ doesn't oppose this. And at the same time, Passantino, he appeals. He appeals his loss to the 11th Circuit. Sort of interesting about this timeline is up until this summer, DOJ under Trump continues to fight his case. So they filed their brief in the 11th Circuit saying the lower court judge's order should be upheld. This was not a meritorious case. The judge didn't make any errors. So, both cases are sort of either in limbo or continually, being opposed by the Justice Department. And what we found then was by September, there are filings in both dockets saying 180, DOJ is now in settlement talks with both of them. And this is the first time in either case that we've seen that type of disclosure. And, there's very little information on what's happening, what's being discussed. In both cases, there are notices saying we need to pause because we're now newly in settlement talks. And this is the moment when I also sort of share that there is a common feature of these cases, which is that Flynn and Passantino have the same lawyer. His name is Jesse Banal. He's represented Trump individually. He's represented his past campaign organizations. He had been part of Sidney Powell's team representing Michael Flynn back in the day. Does work for a number of conservative, Republican, right-leaning clients. So, there is this common feature in both cases, which is the same lawyer, has a relationship with the president and this administration, by the end of the summer, is in settlement talks with the government.
Did anything happen? It should change things, or that's not known?
There's nothing in the public filings to indicate that, and so far in our reporting, that hasn't, been confirmed. We just know that this is sort of an ongoing effort, dialogue, issue that the president and his administration have been very concerned about consistently since he took office, which is, working backwards and trying to undo decisions by, high-level to mid-level government actors across the federal government that they see as wrong, illegal, evidence of political bias, weaponization, a lot of different terms. It was a new development in these cases, but a continuation of something that has been a priority for this administration.
So the Justice Department is negotiating the deal. Is there any oversight over the Justice Department's decision? Let's say the Justice Department tomorrow says $50 million to Michael Flynn. Any oversight at all?
like most settlements in court, there is, a final act of discretion by a judge when they move to dismiss a case when there's a settlement. That's not something that they can do unilaterally, but there is very little room for judges to really probe that process unless they feel like, something happened on their watch, on the docket that requires intervention. But just the fact of a settlement to resolve civil litigation, no matter how far along things are, this is certainly not the first administration to reverse the litigating position of the U.S. government when administrations change, presidents of every party, that happens. It's not as if there's some indication that something nefarious or illegal or wrong has happened. I think it was just a development that, offered more evidence of sort of a broader policy approach by the administration, which is, are there levers of government that can be used to right what the president sees as these major wrongs of his sort of perceived political enemies, whether we're talking about pardons, settlements, declassifying information to make it public, Justice Department investigations, prosecutions. There's sort of been this constant drumbeat of how does the administration use the tools of government and, in some cases, taxpayer dollar to, right what Trump sees as these wrongs.
This year, the Trump Justice Department reached a nearly $5 million settlement with the family of Ashley Babbitt, who was shot during the January 6th riots at the Capitol. Before Trump took office, had the Biden administration been fighting that lawsuit?
Yes, that's another one where, under the previous administration, the Justice Department had been seeking dismissal of, I believe it was some of the claims in that case. There was a pending motion to dismiss, and at a certain point, that position changed, and the administration, once Trump took office, entered into negotiations with the family and their attorneys to reach a resolution. That process is not public. The information came out about that only because there was sort of an ancillary dispute related to lawyers who had been involved in the case that landed on the docket ahead of that settlement being announced. So there was sort of an early preview of the fact that it was happening. But there's no obligation by the government to share what it's talking about, why it's decided to enter into negotiations. And I think it's also, I should say, the fact of settlement talks is not a guarantee of a deal. There can be talks that don't yield an agreement in the end. So we don't know how far along the talks are with Flynn and Pasatino. We do know from court filings that the government put a hold on whatever was happening. So there's been a delay up until now from the past month. So there is just, a lot of secrecy built into this process by design.
There are claims with a political connection to Trump and January 6th that the Justice Department is fighting.
That's right. And it's been a fascinating dynamic to watch unplay because throughout the campaign, President Trump really took up the cause of January 6th defendants as his own and expressed support for them, endorsed the thinking on the right that these prosecutions were unwarranted, overblown. And on day one, Trump signed blanket clemency for those convicted, charged, sentences commuted. All but I think a handful of people received clemency. But then there's been a bit of a break, and a lawyer for a number of these folks, named Mark McCloskey, he told us that they've been surprised and frustrated that when they've gone and filed administrative claims seeking damages for everything from, malicious prosecution, wrongful prosecution, to the conditions of their imprisonment, he says they've been rejected, at least in the first round or so.
Once we find out more, it will be interesting to see where they drew the line, if indeed they do draw the line. Thanks, Zoe. That's Bloomberg reporter Zoe Tillman. I'm June Grosso. Stay with us. Today's top stories and global business headlines are coming up right now.
From the financial capital of the world, broadcasting 24 hours a day at Bloomberg.com and the Bloomberg Business app. This is WPBR New York, Bloomberg 1130.
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
In case you missed it, on Bloomberg Tech.
How do you navigate this time? How are you seeing the ability for NPR to thrive and drive forward?
Well, there's certainly no roadmap for this moment in time. I think this represents a step change for all public broadcasting. It's not just states. The good news for us is that we have a viable model because we've built audiences over the 50 years we've been in existence. We have 46 million listeners a week.
Don't miss Bloomberg Tech, live every weekday. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is Via Katri.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
In recent years, the garbage lending has not gone to public markets. The garbage lending has gone to these private markets. And private credit has been very popular and is now increasingly then over-allocated to by large asset pools. The next big crisis in the financial markets is going to be private credit. It has the same trappings as subprime mortgage repackaging had back in 2006. Now, it took a couple of years for it to totally unravel. So this stuff doesn't happen in a week or a year. But I'm very negative on that.
And that was Double Line Capital founder Jeffrey Goodluck speaking to Bloomberg's Hot Lots podcast about his concerns on the outlook for private credit. Now, KKR's co-head of credit and market says the firm, one of the biggest players in private equity, isn't seeing any elevated concerns. However, he notes signs of a slowing economy.
Our revenues are up 9%, our EBITDA is up 8%. Our interest coverages are healthy over 2 times. Our average LTVs are sort of sub 60%. So we're just not seeing that elevated concern. However, we are seeing slowing in the economy, and we are seeing more dispersion in results. We see that in the public markets, we see it in the private credit markets.
Let's get perspective from Felix Brill, CIO at Liechtenstein-based lender VP Bank. Good to have you with us. So we have from KKR saying that expectations are that it's a slowing economy. If it's a slowing economy, that could have implications on the private credit space, no?
Yeah, definitely, it would have. And actually, we see signs the economy is slowing, but we don't know exactly at the moment the amount of the slowing because we didn't get any data in recent weeks because of the shutdown.
Is Goodluck wrong in warning that there is trouble brewing in the credit space?
No, I don't think he is wrong, but the matter is what is the timing on that? So if you invest in private credit, you have to make sure to diversify, and because the law of the big numbers, they sound good if you do back testing and whatever, but if you're a private investor, have just exposure to some companies in private credit space, if just one of those goes bust, you are hit, and that hurts.
And that is the concern because you're seeing signs already. This is a very illiquid and not so transparent market, correct? And therefore, if the problem were to arise, it could unravel really quickly.
Absolutely, and we've seen that time and time again in the past. For quite some time, it's fine to be invested if the sun is shining. It's nice to go out, right? But if the weather turns bad, if it turns sour, then sometimes the exit is very, very narrow.
So you would continue with the sign of caution. You would continue with that tone in the private credit space.
Yes, definitely. Actually, on most of our clients, we don't do a lot of private credit. It's not part of our liquid investment strategies. There, we focus really on investments where you have more transparency, where you have also more liquidity, so that you can change if the things deteriorate.
And the space where there is plenty of liquidity is actually the equity space. But even then, we have fears about that AI bubble bursting. NVIDIA is one that everybody's watching. We've had the likes of Peter Thiel taking money off the table completely. We have the likes of Michael Burry saying, you know what, I'm waging against it.
What's your own take on where this AI bubble is going?
It's going somewhere, definitely. And it's been going up.
Up or down? Where's it headed? Is it bursting anytime soon?
Honestly, I don't know. And I don't think the biggest risk right now is being invested in AI. Actually, you have to be invested in AI. A bigger risk I see not being invested at all, or only being invested in AI. So from that perspective, it makes sense to, and it's very important to manage your exposure, to manage liquidity, and sometimes also take profit and reallocate it to somewhere else in the AI space. And we've seen that with SoftBank and Peter Thiel.
So getting exposure in AI doesn't necessarily mean investing in NVIDIA, obviously.
Yeah, there's more out there, luckily, than just one company. Of course, it's a very big company. Like if you just look at the market cap, almost $5 trillion US. It's 5 times Swiss GDP, so that's a lot.
So where would you be looking for exposure for AI?
Actually, quite interesting, maybe for the next wave or different pockets, somewhere where it's more AI enabled or tech enabled. You can see that also in healthcare. Longevity is a big topic, personalized fitness, and you need all those trackers and stuff like that for that. So there is room for that on the defense spending side. Also, energy, the power grid comes to its limit, and you need a lot of investment spending there. So that is something to look for and to diversify also on kind of the next levels of AI.
Of course, increasingly, we're seeing China coming up with AI plays. They've managed to, it's mainly open source. It's done cheaper than, the counterparts in the US. Would China be a market you look to for AI investment?
Yeah, absolutely. China is really emerging as a global AI competitor, and they take a bit of a different path to it. And I think it's looking like a very promising path. It's more like open source. For that reason, it might be easier for companies than using AI for their business cases to get profitable sooner. Like that is a big challenge, I would say, in the US right now. Very much focus on the hyperscalers. It's very capex rich, and it takes time to make those business cases profitable. And I think that is the big challenge right now. Probably adoption will happen, but it might take longer than the headlines suggest right now.
How might your strategy be in China, bearing in mind that the US and China are still in negotiations when it comes to trade and export controls? Tech is an area where the two sides are looking really closely.
Yeah, actually, we turned more positive on China recently. Within the emerging market equity allocation, we went overweight for various reasons. We see a bit of a comeback this year. We see positive momentum in the equity market, which can carry on and support the market development. But on top of that, we see valuations. Of course, they have now gone up as well, but they're not as stretched as if you look, for instance, to South Korea or to Taiwan. And on top of that, we see 3 additional reasons. One I mentioned already on the AI space. It's emerging as a global competitor. But on top of that, we see also that it is less US dependent as it used to be. Of course, we have the tariff risks, but so far, China managed to really do very well in this year, and that comes to which is its strong strategic position where.
Yet the economy is still struggling. How are you factoring that risk into your investment?
I would differentiate between kind of the structural view, the long-term view. The Chinese economy is going to grow less and less over the years because of demographics and overinvestment spending in the past. So the Chinese economy will grow every year a bit less than it used to be. But cyclically, that doesn't mean that you can see periods where you see recovery. Also by additional stimulus. If you look at the policy statements recently, they are more supportive on that, and we think that can also be a support going forward.
Given your view on China, would that be a positive for the rest of Asia as well? Could China, lift the rest of the Asian markets?
It could, definitely. We see more and more regional trade, right? Also here, that's a reflection of the less US dependency. And for that reason, then other countries will also benefit if China is doing better.
Alex, when you take a look at what your clients are doing in money flows, do you see money flowing from the US to Asia necessarily?
Not yet in a substantial amount, I would say.
What do you think? People have been talking about, that rotation from the US to Asia.
I mean, probably look at today's headlines, maybe one of the few exceptions, but recently over this year, the US is just dominating. Trump is dominating. And like performance-wise, with AI, really, and NVIDIA media, that has been dominating the news and also the perception where you have to be. But at the same time, the flip side is we see that for many of our clients that are not US dollar based, you see the flip side because the dollar has been weakening so much this year. So it makes sense not only to be exposed to the US, that we argue for that, but also diversify across different regions, across different currencies. And the easiest way to do that is adding the Swiss franc to a portfolio. It's the easiest way, is almost like cheating.
What are the biggest opportunities in Europe right now?
Within Europe, actually, we would say Spain is, the economy is doing really well. Actually, it's a bit of a change. If you look back 10 years ago with the Euro crisis, like the big countries like Germany being the powerhouse of Europe, now that shifted really to Portugal, to Spain because of tourism. That is still post-COVID 5 years later, is still a very strong driving force, and we see even growth increase. So there's now a game shift a bit of the south of Europe doing the economy from an economic point of view much better than the north, and Germany seems to struggle because also like of some structural challenges.
And France is struggling as well. You got to imagine that at some point France could weigh on the whole region.
Do you really want to talk about France?
Like France weigh on the rest of the Eurozone.
I mean, we see now, it's really a big change, tectonic change even, that France, as of recently, had to pay more for its debt than Italy. That's never been the case in recent history. So I don't know if it is telling more about France or Italy, but it's probably definitely not a good sign for France.
We're inching ever closely to the end of the year. What are the key themes you think will play out in 2026?
For 2026, I think it's the slowing of the US economy. How fast will it be? And within that, then what the Fed is going to do, how much room to maneuver does the Fed really have? Because we still see inflation at elevated levels. We still see impacts from the tariff side coming into inflation. So the room to maneuver might be a bit more limited, which might, at least in a transition period, a bit of a challenge for equity markets.
Do you see the Fed cutting in December?
At the moment, it seems a bit like tossing a coin. Because honestly, they're also probably waiting for the data this week. We're going to see the job markets report. It's ancient history almost. It's October data, but still, we didn't get any data in the last couple of weeks. So it's very important now. The new data releases also in the inflation report in order then to assess what the Fed is going to do. It's probably a very, very close call.
There is room for the Fed to be making a big mistake because it's already a divided Fed. Fed officials are pretty much disagreeing pretty much down the line. I'm just wondering how you weigh that and how much confidence the Fed can give to the investment community.
Yeah, it's going to be a bumpy ride, I would expect, because also you see the attempt to influence politically the Fed, like how the FOMC is who's in the FOMC meeting. So that is going to be a challenge. So what we take out of it, we don't try basically to predict the next headline or the exact move of the Fed. We try to prepare for different potential outcomes. Because honestly, we never ever usually have a 100% guarantee what's going to happen. But you have to be prepared. You have to, by investing, you have to avoid the big mistakes, the unforced errors, as if you talk about kind of like in tennis. And that is how we deal with this level of uncertainty we're seeing right now.
If the expectation is for the U.S. to slow down in 2026, how are you preparing for that? How are you positioning for that? How are you countering that slowdown?
Diversification, still diversification. So we also add something on the alternative investment side. We've seen this year already, once again, another stellar year for gold, but it's not just about gold. You see also industrial metals, which are on the up. You look at copper, silver, for instance, aluminum, and you see a lot of need for those industrial metals for the energy transition that is necessary for the AI theme. So there's more room to the upside and to really be prepared. If things a bit more choppy next year, markets turn a bit more sour, that you're not kind of under too much emotional stress also to take at the wrong time the wrong decision.
I'm not sure if you do look at cryptocurrencies, is what's happening with Bitcoin, breaching $90,000.
a reflection of those concerns that you're talking about?
It is. We see a bit of here, especially the de-risking at markets currently, like the worries about valuation, geopolitical tensions, also now with Japan, China, the tensions there. So a lot comes together right now. And Bitcoin, at the same time, we see not so much liquidity actually. So it's a bit more like, I would say, tag on speed, and now a bit more on the downside. Of course, we look at crypto, but for us, crypto is not part of a traditional portfolio because one way or another, it's just dominating the overall portfolio, right? If you just allocate 3-5% of Bitcoin to a portfolio, if it goes up 50%, all you see is Bitcoin. If it goes down 50%, or like now from October 30%, all you see, if you look at your portfolio statement, it's Bitcoin. So we advise take it separately, also for kind of emotional protection.
Felix, great insights. Thank you for joining us. Felix Brill, CIO at VP Bank. There's some breaking news out of Apple. Apple iPhone sales surging in China, taking a 25% share. iPhone 17 sales drove a 37% rise in Apple's monthly smartphone sales in China in October. First time Apple's market share in China topped 25% since 2025. Taking a look where we are in some of those stocks. Han Hai currently down. Of course, this is down day pretty much across the Asian markets as we await numbers out of NVIDIA. Well, plenty more ahead. Keep it here with us. This is Bloomberg. Africa, a region ripe with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. Premieres November 21st. Bringing you up to the minute global economic news whenever and wherever it happens. I'm Lizzie Burnham in Florence, Italy, and this is Bloomberg.
Morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is Bianca Tree.
This is Wall Street Week.
Welcome to Balance of Power. This is Bloomberg Television.
I'm Alex Rodriguez.
And I'm Jason Kelly. And we're back with another season of The Deal, with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones, Erica Ayers-Badon, Robin Arzón, Justin Tuck. Stay tuned. You won't want to miss it.
Asia is at the forefront of some of the world's biggest stories. And we're here where the action starts in Sydney and in Tokyo. Get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
The conversation around your company.
Bringing you insights on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
Can't fake fashion. You either are or you aren't.
Bloomberg Business Week Daily. Every business day at 2 p.m. Eastern. Only on Bloomberg.
Welcome
welcome back to Insight. AI-related assets are facing a reckoning as investors reassess risk and challenge valuations. We spoke to Kai-Fu Lee, chairman of Sinovation Ventures and CEO of 01.ai, about the business models forming around the technology. He makes a case for why the Chinese approach could be more sustainable than the one in the U.S.
The fundamental difference is actually closed source versus open source.
Yes.
The U.S. model is necessarily propelled by this ambition and dream of one company reaching AGI first and squashing everyone, winner take all, worth trillions of dollars. That's what OpenAI, Anthropic, Google, and others are betting on. And it's like a genius kid who thinks he or she will win the Nobel Prize. The China approach is, hey, let's all work together and share, we compete, but let's open source our models. So A learns from B, B learns from C. It's more like a study group of smart kids, maybe not genius kids.
But is the open source a reason why a lot of these Chinese AI startups cannot monetize?
Well, I think there's a common belief in U.S. and China. AI is the most important technological revolution ever. There is a belief that this monetization will happen. It's happening first in the U.S. and it will happen later in China. So there's a bet that if all of China kind of pseudo collaborates through open source, then builds a great platform, then everyone can benefit because the knowledge of the platform. Or if one company comes out ahead, there's a chance to leap ahead and be the next great company as well. So there's tremendous optimism that AI is changing the world, and these models, closed source approach is a belief one company will squash everyone else. Open source is, hey, let's share for now and we'll see what happens.
In China's case, where you don't have to pay for it, where it's open source, how is the innovation getting funded, and how do you justify to those asset allocators that they will get a return for their investment?
Well, I actually like the Chinese model better. While the likes of Alibaba, ByteDance, Baidu, they're paying a lot of money. They're willing to subsidize because it's fundamental to their core business, whether it's e-commerce or search or social. And I think they're smart business people. They'll do the balancing. They're not spending a tiny fraction for the OpenAI spending.
Right.
Now, the OpenAI spending is a big bet, big return. It's betting that it will win. Whereas I think Alibaba, Baidu, Tencent, ByteDance, if they're spending more prudently, which they are, they will be able to look at the whole balance sheet and deliver a reasonable result. We don't see any of these people reporting huge losses.
Right.
So I think the Chinese model is more prudent for a financial investor. The U.S. is a winner take all. So you pick your winner. If you win big.
Yeah.
If you lose big.
That was Sinovation Ventures chairman Kai-Fu Lee speaking to us on the China Show. Now, same with Chinese AI, Baidu is set to report its third quarter results today, and investors will be focused on the strength of its AI cloud revenue growth. Bloomberg Intelligence senior analyst Robert Lee joins us now. Rob, what has been driving the stock? It's been a pretty wild ride.
Yes, a wild ride and a half, has Linda. Well, I think, as you mentioned in your preview, people will very much be focused on the cloud business. We expect the momentum of that to pick up further, driven by increasing development spend in China's AI sector. But taking a step back, the level of revenue relative to their core search engine business is actually quite small. In fact, too small to really move the needle at the bottom line. And I think the bigger concern with a stock like Baidu or a company like Baidu is its core search engine business. So people have often referred to Baidu, for those who are less familiar with it, as the Google of China. So they were the dominant search engine business and remain so to some degree. But search engine revenue generation is ultimately driven by advertising spend. Obviously, China's advertisers are going to spend their dollars where consumer eyeballs are going. Increasingly, people are using using Baidu to a lesser extent as platforms like Douyin, which is China's TikTok, and also the likes of Xiaohongshu rise in popularity. So as a result, Baidu's been really bleeding advertising dollars. And if you look at the consensus numbers going into the Q3 prints today, the consensus is actually looking for the net income in that business to half, to be down by 50%, which is a massive decline, reflecting the lack of real monetization on the AI side and the huge pressure that their core search engine business is under.
And Rob, speaking of bleeding, just to let our viewers know, the Nikkei 225 is bleeding. It is down about 3% as we speak, and this has to do with that risk sentiment pretty much across Asia. We know you've been bearish on this company all along, right, Rob? I mean, it's no secret. Has your fundamental view changed?
No, well, I think, every investor, requisite number one is keeping an open mind to things, but I think our view on the fundamentals for Baidu has been on the money so far. I mean, you've seen a liquidity-driven rally, a lot of local buying in the China market over the last 6 months or so, which again, going back to what you said at the beginning, it's been a wild ride for Baidu's stock price, but ultimately it's the fundamentals that drive stock prices over the medium term. So I think, today's results will be a back to reality, back to basics. And unfortunately, from Baidu's perspective, this is a business which is actually under massive pressure at the moment. I would also argue it's too thinly spread because they're pursuing potential leadership in the robotaxi space and autonomous vehicle space, as well as AI, as well as chatbots. They're a medium-sized business, and I think the last thing I'd mention is, if we had this conversation 2 years ago, Baidu was clearly the leader in China's AI software sector, but their lead has been progressively reduced as the big guys, the big tech platforms, the Tencents and Alibabas have moved into that space. So it's a business, unfortunately, that is thinly stretched and under huge pressure and just doesn't have the resources, whether financial resources or engineering resources, to compete with these big players coming in. So unfortunately, no wonder they're under massive pressure.
Rob, thank you. Bloomberg Intelligence Senior Analyst Robert Lee there, and it's not just Baidu. Xiaomi also set to report earnings. We'll have more on what to expect from the company that makes mobile phones, cars, and almost everything in between. Meantime, well, it is a painful day if you're in the markets. We're seeing Asia extending the losses, the sell-off in global stocks carrying on to its fourth day as investors turn cautious ahead of NVIDIA's earnings, as well as the key U.S. jobs reports. Later, of course, we had the Nikkei 225 under pressure. It continues to be under pressure, down by 3.2% as we speak. The Kospi also down. It is lower by 3.3%. So a red day pretty much across Asia as we await NVIDIA's report and, of course, the jobs data out of the U.S. Plenty more ahead. Keep it here with us. This is Bloomberg. Bloomberg Surveillance, your home for insight on international relations. With guests like Eurasia Group founder Ian Bremmer.
America's word is no longer something we want to count on.
Elizabeth Economy of the Council on Foreign Relations. China has the stronger hand, and at some level it's always had the stronger hand. And Admiral Michael Mullen.
Putin's the most dangerous guy on the planet. It's not just going to stop with Ukraine.
Bloomberg Surveillance. Weekday mornings at 7 on YouTube, the Bloomberg Business app, and always on Bloomberg 1130. Stay connected with Bloomberg wherever you are with Bloomberg Podcasts. On Abbas, why longtime venture capitalist Paul Kudrowski says AI is like every previous bubble rolled into one. On Trumponomics, Democrats find a potent political weapon named affordability. And on Everybody's Business, while other retailers are struggling, how is Ulta thriving as the largest beauty store in America? Listen to Bloomberg Podcasts on Apple CarPlay and Android Auto with the Bloomberg Business app, or anywhere you get your podcasts. Bloomberg Podcasts. Context changes everything. Now, your 3-day weather forecast on Bloomberg 1130.
Clear skies tonight with dew and issue winds, low 30 to 35. Some morning sun and increasing afternoon clouds on Tuesday, high only 45 to 50. Mostly cloudy, some showers around Tuesday night, low in the middle to upper 30s, a little cooler in the suburbs. Morning clouds and becoming partly sunny on Wednesday, high again 45 to 50. I'm Scott Kaplan with your 3-day forecast on Bloomberg 1130.
The big
a daily podcast from Bloomberg and iHeartRadio, highlighting the best reporting by Bloomberg News from around the globe.
The post-pandemic boom in cruises, China's influence over Iran.
News about President Trump's copper tariff. Each weekday, we dig into one important story and tell you why it matters.
The new economics of Broadway. We've been talking about the Federal Reserve.
There could be this shadow Fed chair. Listen to The Big Take on the iHeartRadio app, Apple Podcasts, the Bloomberg Business app, or wherever you listen.
It's going to be the consequence for the U.S. market. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up to the minute news whenever and wherever it happens. I'm Hassan Amin in Bangkok. This is Bloomberg. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shined the spotlight on these dynamic leaders. Today's Standard Chartered is thriving, managing assets and connecting clients around the world. And at the same time, CFO Georgie is preparing the bank to compete tomorrow.
The game here is understanding digital assets have the ability to change the payment landscape of the world, and we need to be ready.
Watch Chief Future Officer Wednesday on Bloomberg.
Welcome back. You're watching Inside. We're seeing the global sell-off expanding into Asia. In fact, the MSCI Asia Pac Index hitting a one-month low, on track for a third day of losses, where the MSCI Asia Pac Index 2%. The Nikkei 225 as well as the Kospi down by more than 3% as we speak. The MXAP below its 50-day moving average for the first time since April. A couple of things here. As we've been talking about the numbers out of NVIDIA, it's front and center along with that U.S. jobs report later this week. Yes, the jobs report is a tad late, but it could be an indication of what's to come in terms of the Fed move in December. In terms of the U.S. futures market, extending losses as well. Nasdaq 100 contracts down as we speak. The Euro Stoxx futures also in negative territory, down about 1.5%. In terms of the S&P futures, down 0.6%. It is red pretty much across the board. Alarm bells ringing for analysts to study chart patterns in the U.S. stock market, by the way, fueling concern that the latest dip could swell. And we could just see a full-blown correction on the back of that. One stock we're also watching is Xiaomi, currently down about 3%. It's gone from market darling to the worst-performing Chinese technology stock in just a few months, as it faces headwinds in the smartphone and EV markets. Asia Transport reporter Danny Lee is with us. Danny, one of China's hot emerging EVs is made by Xiaomi, better known as a smartphone maker. What will its earnings likely deliver? What are you watching out for?
Yeah, I mean, smartphones is really the bread and butter for someone like Xiaomi, but its push under Lei Jun, its founder, to really expand into something of a growth sector like EVs means it has paid off largely. The growth from EVs means it makes up around 20% of total revenue. It's still a very much growth driver, and we'll be fascinated to see what management has to say about that during third quarter earnings later on today. But for the market, the street, they're expecting revenue coming around 113 billion yuan, so that's around $15.8 billion US. Any kind of growth on the revenue side north of 20% year on year would be very much a beat for the street. And then when you look on the net income side, we're looking for around 9.6 billion yuan. So anything that sees the management talk not just about EVs, but of course AI would be very much closely watched. But it's the traditional kinds of business lines such as smartphones, Internet of Things, which will see fairly muted kind of revenue growth. But it's where you have the likes of EVs and AI, that kind of other new business initiatives that could see a combined revenue growth of up to 200%. So there's a lot to look out for and potentially digest. It's definitely not been smooth sailing for Xiaomi of late, but very much something we'll be very much looking forward to.
And the thing is, we've had from other Chinese automakers as well, right? Out with earnings, namely XPeng, whose shares are being hammered. What's going on there?
Yeah, Xiaopeng shares are down by around 10%, the most in more than 7 months, because of a guide for the fourth quarter revenue that was lower than what the street had been looking for. So it gave a guide of around 21.5 billion yuan to 23 billion, but that's short of the 25 billion yuan that analysts had really been expecting. So it's disappointing on that front, despite the very strong run it has seen over the last several quarters now. But on the flip side, it's on the losses it's making. They're shrinking, and that kind of gives some encouragement that this is an EV company that could start to turn profitable in 2026, according to some of the analysts' estimates. So whilst it's still a bit of a tough slog, and particularly around the regulatory scrutiny that wider China EV industry is facing, that doesn't just impact Xiaopeng, but the likes of Xiaomi as well, there is still some potential green shoots for the likes of Xiaopeng into next year as it pushes through to try and turn profitable.
Great stuff, Danny. Thank you so much for that. Bloomberg Asia transport reporter Danny Lee. Now, Brazil's President Lula da Silva is calling for a roadmap to transition away from fossil fuels. The country is hosting the COP30 summit, and the pressure is on for officials to reach a deal by Friday. Meanwhile, India's Environment Minister is calling on richer nations to step up. Speaking at the COP30 summit, he urged developed economies to move faster towards zero emissions and mobilize more funding to help different countries meet their climate goals. Let's get perspective. Vaishali Nigam, co-founder and sustainability chairperson at Indian Solar and Wind Power Generation Renew. Vaishali, give us a sense of how optimistic you are about that roadmap that Lula is looking for.
Yeah, hi Haslinda. It's really a pleasure to be on the show and to have a chat on what's happening at COP. To say that I am optimistic about what's going on at the COP in Brazil. There was an initial sort of tonality around who's going to get there and so on and so forth. But what I hear, there has been a lot of momentum around discussions, participation by the indigenous communities. I think the largest ever catering fair organized by the a voice for the indigenous group on the table is being sought. So, these are all very important elements to ensure that, the folks and the stakeholders who are getting impacted by climate, because of which a lot of these discussions are happening, are there around and their voices being heard because they know what we're talking about. I think if you look back also, Haslinda, in 2015 at the Paris COP, there was a certain ambition where we had to meet our, temperature, bend the temperature curve. At that time, we saw it at 4 degrees. The target was 1.5 degrees by 2030. We have not got there, but we are at around 2.6 degrees centigrade. So not a stellar performance, but I must say that net countries are committed and are moving in the right direction. And if I could speak about, commitment here in India, all I can say is the intent is strong and the action is stronger.
COP30 is crucial for emerging markets in particular. For a country like India, how important is it and what are you hoping for?
Sure. So, yes, absolutely, it's crucial. If you look at India, when we look at our trajectory from let's look at a decade as a benchmark. I think a lot has been accomplished. First of all, we've been able to accelerate and, sharpen our ambitions from about 75 gigawatts to, now we're talking about 500 gigawatts of installed capacity by 2030. Now, that's a huge leap in ambition. And what that does is that really propels all other stakeholders to get engaged and contribute to the emission reduction which the country has pledged for. So as we speak, if I could talk about even in the private sector, there's been a huge amount of engagement, whether it is in the traditional IPP sector, whether it is around just the entire value chain of manufacturing, of and self-reliance. We've seen a huge amount of progress on the ground in terms of just an industrial build around greening our infrastructure lot of capital coming in because there has been a very active management of delivery of projects, policy trajectory which has been positive, and hence capital flows where there is efficiency of project execution. So net we see that we continue to do what we are doing. We're one of the fastest growing renewable energy sectors in a country, right, and look forward to accelerating that.
It is about getting the right partners, right partnerships, as well as investments for India to meet the goals. Is India in a good place for that to happen?
Yes, absolutely, Haslin. If I look at, if I could look at our own example, as far as raise is concerned, we've been able to actually mobilize equity investors over the last decade and a half from around the world. We've had JERA from Japan. We've had CPPIB from Canada, ADIA from the Middle East, multilateral organizations such as IFC, all get mobilized to invest in India's renewable energy story. As far as our projects are concerned, we are seeing investments coming in from Asia, from entities like Mitsui and many others to invest in our project portfolio. We've just seen a very recent investment by BII, which is the British investment agency, in our manufacturing facility, which is one of the largest in India. So definitely we cannot do this without partnerships, not only with financial investors, but also partnership with our communities, partnership with other private sector players. And honestly, if I could also come to the point that it is important for us to really reflect on the global partnerships and collaboration and cooperation, which was really I would say, the beacon about 3 to 4 years ago, which is blinking a little bit now. But then others are stepping up. I see the step up happening in India.
How are you planning to scale your generation portfolio over the next 5 to 10 years? What needs to happen? What's the vision? What is the strategy?
Sure. So, there's a huge amount of opportunity in India. I mean, when you go from 75 gigawatts 10 years ago to 500 gigawatts target, there has to be action on the ground. And over the last, I would say, a decade, we have seen FDI inflows increase by 140+% in a decade. And just 18%, just last year by 18%. So there's a huge amount of funds which are coming in to feed into just conventional renewable energy growth, which would be solar farms, wind farms, etc. There's hybrid sort of facilities we are setting up. The first, the largest ever round-the-clock facility which we've set up, where we have a global partnership as well by global companies. So also green hydrogen, of course, has had its own hiccups, but we really do need, that's growing well. The policy framework is in place. I think we need a little bit of step up by the developing economies from the demand side, but on the supply side, there is a huge amount of infrastructure which is being set up, and I'm pretty confident with cost of electrolyzers, etc., coming down. I think we will be able to see kick there as well. As far as manufacturing is concerned, it's a huge opportunity, and I must credit again the Indian government's PLI, which is a product-linked investment framework, which has really driven the private sector to get engaged and to set up facility on the ground, which is globally competitive and is generating jobs. So, there is a domestic push and there is a demand in India and globally as well for the panels which are being manufactured and the entire product chain as well.
There is currently a lot of talk about green hydrogen and the carbon market. How important are these to your future growth at Renew?
So I would say that the portfolio, as I highlighted, it's about the traditional renewable energy, which is currently about 60% of our portfolio. Our manufacturing facility is growing quite well, and products like pumped hydro, green hydrogen, and are all a part of our portfolio. But we are also waiting and watching to see what's going on there, because there are lots of, as I say, pieces of puzzles globally also which need to be resolved. So perhaps more collaboration innovation globally to be able to kick these off here, and some technology and innovation to solve for product innovation and cost associated with it. Right now, green hydrogen costs about $3 to $6 per kg in India, and compared to about $2 for gray hydrogen. We are hoping that we can bring it down. We've seen it for the traditional IPP sector, and we are quite hopeful with consistent effort, with the supply and demand balancing out and some enabling policies globally, not only in India, we'll be able to get there.
But in terms of green hydrogen and emerging markets, realistically, how big a role can it play in markets like India?
No, absolutely. I think green hydrogen, there's a huge hard-to-abate sector in India, and there is, of course, a huge demand for sectors like steel, cement, etc., as they sell their products globally, for them to sell green products. And green hydrogen really is going to be a part of the puzzle, which is going to solve for this product competitiveness. So as far as we are concerned, we provide the clean element to it, moving it from, I would say, gray to green, and we see that as an opportunity. But as I said, every opportunity takes time, so we need a little bit of sort of innovation and cost effectiveness for the product. And I think the industry is coming together to address issues and gaps, and the government has also helped in enabling policies as far as green hydrogen is concerned. So it is a part of our portfolio, and we are deeply committed to growing our portfolio here in India.
You touched on innovation a lot. I'm just wondering, what is the case for future tech in the decarbonization roadmap for countries like India and other emerging markets?
Sure, that's a great question. As far as, we've been hearing a lot about data centers, and data centers are being set up in India with great amount of speed, and a lot of these data centers need decarbonization solutions. And at Renew, we are working with a lot of these partners, including Microsoft and various other companies, are in discussion with other companies to provide them with the clean energy which is required. So that's really going to be the future, and we see that as a huge opportunity in our portfolio as well.
In terms of China, China's dominance in the industry, how do you assess that, especially in relation to India?
Yeah, Hasina, I think China is doing what it's doing, and it's and that's they have their own strategy. I think what India has been able to do, given the current geopolitical complications we see around, also the need for us to be self-reliant. I think India, because of its policies of self-reliance, has been, over the past 5 years, triggered by COVID, been able to build our entire value chain in India in a way which is, which is competitive, and which helps us to be self-reliant. And so we are working on our quality and our production and manufacturing to ensure that we can really not only use products made in India, but also make them competitive globally. And we are seeing a huge amount of demand for our products globally as well. We've seen that in certain parts of the world, the commitment to renewables is going down, and it's a real step up. I think there's so much demand globally for renewable energy, for clean tech, that India, there is enough space for multiple countries to really double up their efforts, and we see that happening in India quite well.
When do you see perhaps Indian companies like Renew being as competitive as their Chinese rivals?
Sorry, what was that?
When do you see companies like Renew being as competitive perhaps as the Chinese rivals?
I would say that, comparison is good, but I believe that, it's good to be focused on our own strategy, meeting on our